Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and E-mini S&Ps. Not finding a whole lot of favor today. We're kind of spinning our tires, so to speak, hovering at that late June low to the mid-August high, 24.45 in the E-minis. That's kind of, we found a home there. We've been trading back and forth through it. Ultimately started trading off late last night after President Trump started his speech and looking for that next great buy level. Let's not forget that every great sell-off we've seen over the last, call it 7 to 8 years, has been met with open arms and bought pretty aggressively. And we've always followed each sell-off with a higher high. So I don't see how this is going to be any different. I think that right now you have to bide your time. Certainly, most equity portfolios are very long, maybe seeing some modest profit taking on some of these potential declines and around risk areas. But I think that right now it's just it's a wait and see mode. And wait and see mode is also evident in volatility. We recently saw volatility spike to new highs and come in the VIX index, but then it comes right back off almost instantaneously. And while we are seeing the VIX index hover off, they're not on the lows. That's been kind of the trend this year as to how quickly can we make a new low. It's been off the lows, but certainly as a historical precedent, we aren't seeing anything significant. In fact, we're right at the currently right at the 100 and 200-day moving averages in the VIX. But if you go back a few years, it was much higher than where it is today. So I think right now the volatility still remains low, although certainly could be lower and could be worse. And I think right now the next big event for equities is going to be the weekend meeting, which starts tomorrow, evidently, in Jackson Hole, the Kansas City Fed Symposium. And that is going to feature many central bank heads, including our own Janet Yellen and ECB President Draghi. They will speak on Friday, and that will be certainly the next moment that stocks will get either a big bid higher or a big bid lower, or a big sell-off lower, excuse me. And I think that right now, if you go back to the end of June, we had the ECB forum where they talked about removing stimulus, talked about the central bank in Europe being a little less aggressive. And I think that was what sparked a lot of the yields movement higher in treasuries, not only here, but overseas. And we did see a modest pullback in equities. And I think that right now that could be the reason that what we're waiting for. That's the next buying opportunity in stocks, because I think no matter what the Fed says, no matter what the ECB says or the Bank of Japan or whoever happens to be at the microphone at the time, equities aren't going to believe any sort of central bank shifts until they actually get a central bank shift. And if you look at what our Fed has done since December of 2015, we've called it a rate hike cycle, but we haven't really seen any kind of cyclical rate hikes. We've kind of we got one in December of 15, one in December of 16, and yes, we've gotten two this year so far. But I think that right now the market is saying, until you get rates up to a certain level, get the overnight lending rate over 2%, and then we'll maybe start to funnel some of that money out of equities. I think right now equities remains the place to be, and you're going to continue to see buyers waiting on the sidelines for moments just like that. So if there is a hawkish tone this weekend out of Jackson Hole, look for equity buyers to come in early on Monday. Likewise, if it's a dovish tone, I think you're going to see them rush to get in before the weekend. So there's a kind of a wait and see mode for equities today and yesterday, but tomorrow starts the conference. Friday's the big day with Yellen and Draghi, and then we're off to next week. This is Todd Colvin coming to you from the floor of the CBOT.